So something broke this year, not in Tokyo and not in Washington, but in the global machine that quietly kept America rich. And the most shocking part is that the collapse didn't happen with sirens, speeches, or headlines. It happened in silence, inside a bond market most people never think about. At the exact moment, Japan, America's most loyal lender, finally stepped back. And if you've been feeling like everything suddenly costs more, mortgages, rent, groceries, credit cards, even the air you breathe feels taxed, that's not your imagination. That's what happens when the world stops subsidizing a superpower. Because here's the part nobody in mainstream economics wants to say out loud. The era of easy money, the era that made American life feel stable, predictable, and affordable, it seems to be over. And the real story isn't inflation or interest rates or political theatrics. The real story is that Japan quietly walked away from the table. And once you understand why it happened, everything else starts to make a certain amount of sense. Because the truth is somewhat simple. Japan is no longer financing America's debt. And that one shift changes the global order. Because when your largest foreign lender steps back, someone else has to pay the price. And that someone is going to be us, home buyers, renters, borrowers, businesses, workers, taxpayers. Every person living inside an economy built on the assumption that money would always stay cheap. But that assumption, it seems to be gone. Because Japan didn't betray the United States. It just simply ran out of room economically, demographically, and strategically. And when a pillar of the global financial system quietly retracts, the entire structure starts to shake. So what looks like a United States problem is really a global capital rotation that has been building for decades. For 40 years, the United States borrowed like the world would never send a bill. Because Japan, aging, cautious, savings-rich Japan, was buying United States Treasury like it was a national duty. At one point, over $1.2 trillion of American debt sat in Japan's hands. That wasn't charity. It was economic strategy. Japan exported goods to the United States, then recycled the profits into US bonds, keeping the yen weak and American borrowing cheap. A perfect feedback loop until the loop itself snapped. Now, you may have seen some of the headlines saying Japan is collapsing, but Japan isn't collapsing. Japan is repricing. Because after 30 years of net zero interest rates, the Bank of Japan is finally normalizing. Japanese bonds, which used to pay essentially nothing, now offer real returns. It's like a lifelong friend who always lent you gas or gas money for your car, suddenly saying, actually, I need to keep this for my own bills this time. The friendship didn't end. The math just changed. Japan's population is shrinking. Its retirees need safe domestic returns, not foreign adventures at this point. So when you have more grandparents than you do grandchildren, you don't gamble abroad. You start to consolidate at home. And this demographic shift is quiet. It's uncontroversial, but it is also brutally powerful. It moves capital the way gravity moves water. And Japan's public debt, it's pretty massive. I mean, over 235% of GDP. Servicing that debt gets harder as yields start to rise. So Japanese institutions tighten, they localize, they repatriate. And in just one quarter, Japan sold $62 billion in United States Treasuries. That isn't diversification. That's a full-on retreat. Now, layer on the geopolitical shift, Japan is now in a strategic squeeze with China. They're in a squeeze militarily, economically, technologically. And defense budgets, they're rising. Energy imports are rising. Currency defense costs are rising. Everything Japan needs is getting more expensive. Everything Japan used to finance through its surplus is now competing with national security. Then there's the carry trade, the global financial machine built on borrowing cheap yen to buy high yield assets around the world. For decades, it was the quiet engine powering stock booms, housing bubbles, and emerging market surges. But when Japan adjusts its interest rates, that engine, it starts to backfire. And we saw a preview of it last year. The S&P 500 dropped 3% in a single day because the yen jumped for 2 hours. 2 hours. That's how fragile the global system has become. And now that brings us, or now we arrive at the part where the story that affects all of us directly. Because when Japan buys fewer treasuries, United States yields rise. And when yields rise, mortgage rates rise. And when mortgage rates rise, housing affordability, it collapses. Not like it isn't already to some extent. But your monthly payment, it's not exploding because your house changed. It's exploding because the global era of cheap capital ended while nobody was looking. Now, mainstream media will blame inflation or the Fed or political gridlock, but the structural story, the one that explains why everything feels heavier and more expensive, is almost never said out loud. America's borrowing model depended on foreign leaders who no longer exist. China stepped back years ago. Saudi Arabia is diversifying. Europe is completely overleveraged. And Japan is aging out. So who absorbs America's debt now? Well, the uncomfortable answer is we do. Through higher rates, higher taxes, higher housing costs, higher borrowing costs, through a system that shifts the burden from foreign buyers to American families. And the deeper truth beneath all of that noise, America didn't lose cheap money because Japan changed. America lost cheap money because the era that made it possible is gone. The 40-year experiment of globalization, offshoring, low inflation, low interest rates, and foreign-funded deficits, they have ended. And no political speech, no Fed press conference, no Washington promise can bring that back. All right, guys, what do you think? Do I have this all right? Do I have it all wrong? Put it in the comment section below. I look forward to reading and replying to all of your comments. And again, guys, thank you so much for watching me here on The Baseline. All right, cheers, everybody.